Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Vamakshi Doria and with me is Vivek Iyer. Vivek, well, it's the beginning of a new week and the markets so far are doing quite well. They're holding on to the gains that we saw early morning.
That's right. Good afternoon, Vamakshi. So we're starting off the week, on a strong session. Remember, global markets, quite a few of them are closed on account of the Labor Day holidays. But here, mainly reacting to earnings, and earnings so far have not been very disappointing. The only laggard today is the Bank Nifty on the back of slightly muted loan growth coming in both from Kotak as well as SBI. So Bank Nifty is the only laggard in today's trading session. Broad end of the market is doing quite well. We have quite a lot lined up on the show, so let's start off on the top headlines. Markets off the morning highs, weighed down by banks. Midcaps outperform. Auto along with oil and gas are the big gainers, even as banks drag.
Crude oil prices drop after OPEC Plus decides to increase output by a higher than expected 4 lakh barrels a day in June. Stocks of oil marketers and other crude-sensitive businesses perk up.
Parag Milk gains after Q4 revenue and EBITDA surge on year-on-year basis. The company says they took a price hike of Rs 2 per litre effective May 1 due to rising procurement prices.
IGL in focus after company increases CNG prices in Delhi NCR area by 1 rupee per kilogram to 77.09 rupees per kilogram. Stock surges over 4%.
RR Kabel surges after achieving their highest ever revenue in Q4 FY24 as well as FY25. EBITDA surged 68.7% on a year-on-year basis. Also, the stock gains on positive management commentary coming in from the company.
Well, 24,450, that is where the Nifty is at, and contributing to the gains is Nifty Auto. Motherson is up nearly 3.9%. So is Bosch as well as M&M after its numbers. The Nifty Bank, clearly the laggard in trade dragged down by both Kotak as well as SBI. But the mid-cap space, that is doing quite well. When we look at the advanced decline ratio, that will also come up for your screen. That is holding firmly in favor of the advances, and lots of stock-specific action playing out in the mid-cap space. And to take us through just that, we now have our special segment, Mid-Cap Movers. Hormaz is across the wall to take us through the mid-caps that are moving around in trade. Good afternoon, Hormaz.
Good afternoon, Vamakshi, and plenty of them moving around in trade. And you'll start off with Swiggy. And interestingly, that stock is going to be in focus over the first fortnight of this month, reporting results later this week, a shareholder lock-in ending next week. So plenty of action awaited in Swiggy, 8% higher now on the stock. And Motilal Oswal is the other one as well, 7.5% higher there as well. Vari Energy is having a good day in the office today, nearly 5% higher. We've been pointing out that earnings reactions today have been on the extremes, but on the positive side in today's trading session. Take a look at this. RR Kabel is up 15, and that is off the highs of the day and is still up 15%. Netweb is up 13. Gravita is up 7. All of them are off the highs of the day, still holding on to substantial gains. CDSL, though, has recovered from the lows of the day, but still down 3%. But take a look at what RR Kabel's results have done to the other wires and cables companies. Look at Phenolex Cables, that's up 6.5%, nearing the highs of the day. KEI Industries is at the highs of the day, 5.5% higher. Polycab is up 4.5%. Most of them reporting results tomorrow, so it'll be interesting to see how they fare going forward as well. So good day for these wire and cable companies as well after RR Kabel's results. The other big talking point has been the fall in crude oil prices, and that has impacted all the oil sensitives. Look at HPCL, another one reporting results tomorrow, 6.5% higher here. Interglobe Aviation, another positive impact. Tire stocks too seeing a positive impact as a result of this. And lastly, stocks that are doing well and not so well on the back of volumes. JBM Auto, 5.5% higher. Ircon, after the order win, is up 3.25%, but off the highs of the day. And Jindal saw another earnings reaction, down 5.5%, but on high volumes. Back to you guys.
Thank you so much, Hormaz, for taking us through the list of movers, mainly earnings dominated, but quite a few stocks also from the broader end of the markets reacting to the kind of macro developments, especially crude oil price movements. But it's a good time to welcome Ruchit Jain from Motilal Oswal Financial Services for a tech check on the market. Good afternoon, Ruchit. Thank you so much for joining us. First up, what do you make of the market at current levels, Nifty as well as Nifty Bank? Do you see further upside?
Yeah, very good afternoon, Vivek. Well, in last few trading sessions, we have seen some signs of some consolidation coming in on the index front. Because if you look at the levels of around 24,500, 24,600, then this is the zone of 61.8% retracement resistance of the entire correction that we had seen from all-time high to the recent swing low. And also, if you look at the market breadth, today it's positive, but if you just look at last 5 or 6 trading sessions, it has been just 1 or 2 days where the market breadth of NSE 500 has been much on the positive side. So we believe that on the index front, we are likely to see some sort of consolidation where 24,600 would continue to act as a resistance, whereas 24,200, 250 would be a support level. So, no, we are of the opinion that on the markets, no, one should keep a buy and dip approach as far as index is concerned, not expecting a run-up rally immediately soon, but rather if we get any declines, then the risk-reward ratio should become favorable at lower levels.
Thank you so much for that, Ruchit. This is Vamakshi Dhuria now joining in. You're expecting some consolidation at that 24,600 mark, but what are some of your top picks as far as stocks are concerned?
Yeah, good afternoon, Ramakshi. Definitely, even if the index consolidate, I think the stock-specific opportunities would provide a good momentum. And couple of names that are on our radar from here on. One is HAL. In fact, the entire defense theme, we believe in the month of May could do really well. April was a month where we witnessed very good price volume action for many of the defense stocks. So here it seems that the trend continues to be positive. So HL has also recently given a breakout from its falling trend line, higher top, higher bottom structure is there. So HAL can be bought at current levels with stop loss below 44.40 for potential near-term targets around 4850. And Marico is another name which after numbers, I think today if you see, then the stock has resumed its uptrend and has given a breakout from a bullish flag pattern. So also if you look at compare Marico with other stocks within the FMCG space, then it has shown that relative outperformance within the sector also. So I think this should continue its uptrend. So Marigo can be bought even at current levels with stock below 700 for potential targets around 760.
Thank you so much, Richard, for joining us, giving us a sense of market technicals as well as the individual stock calls, Marico being one of those particular stock calls. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back to Midcap Radar. Well, this is our special segment, Midcap Spotlight. Mangalam today is joining us and focusing on Parag Milk, which is surging in trade on the back of a good Q4. Mangalam, what's the earnings fine print? What is it that the street likes so much?
Well, a couple of things that the street likes for Parag Milk and the dairy sector in general. The first part is that they reported their numbers during the weekend, and in that, while there was a 16% jump in their revenue, there was gross margin stability at around 25.1%. Importantly, the EBITDA surged by 68%, and the EBITDA margins themselves grew by almost 200 basis points from 4.7% to 6.8%, which is a massive jump given the commodity nature of this business. And the net profit on the back of that and a lower base jumped all the way from 10 crores to about 26 crores itself. What is it that led this growth? The volume growth this time around was 13% for them, and 57% of their revenue came in from core categories, which is, ghee, etc. 6% came in from new age premium businesses, which grew 29%, and these are margin accretive for the company on the whole. Over the last 4 quarters, if you've seen, the milk procurement prices have increased from 31 rupees in the first quarter to 33 rupees, 34 rupees, and in the fourth quarter itself is 37 rupees. And as we've heard from players like Amul, Mother Dairy and Parag Milk itself, now they've gone ahead and taken a price hike of almost 2 rupees per litre to mitigate the challenges of higher procurement prices, so which means that the dairy cycle is on the upswing for the next couple of quarters as well, with increased value-added products, new age products, and higher procurement prices being passed on to the consumers by virtue of price hikes. The street likes all of this, and that explains why the stock is up around 14% after having taken a beating over the last few months. Now the stock has recovered from lows.
Well, thank you so much, Mangalam. Definitely keeping an eye out on Parag Milks. But, there's one more counter that is surging in trade after its Q4 earnings. That stock is Gravita India. We now have Nigel joining us with some of the key takeaways from the numbers. Nigel?
Well, hi, Vamakshi, and good to see you there. That's right. I'm going to tell you about Gravita. The stock had fallen close to around 30% from the top, and it's higher in today's trading session. The reason is that their operating performance is quite good. So the way they look at the revenues, they include other income because they believe it's part of their operational income, and they've clarified on the channel numerous times. So revenue growth of close to around 21%, but the EBITDA number grew by close to around 32%, which meant that the margins did expand to around 11.9%. That compares with around 10.9%. So that's 100 basis points higher on a year-on-year basis. The PAT number as well did spike up by close to 37%. Couple of elements out here. Finance cost was lower, but effective tax rate that they paid was relatively higher. So that's what explains the PAT performance. Operationally, though, things look good. Segmental, well, lead is the bulk of their business, and the lead revenue growth was good. The EBIT number was very, very good. Came in at around 114 crores. That compares with around 80 crores on a year-on-year basis. And just take a look at it on a unit basis. The margins were at around 13%, which is a sharp improvement both on a year-on-year as well as on a sequential basis. And the EBITDA per unit, well, that clocked in 20,500 rupees per ton, which is much better than what we have seen in the previous quarter as well as on a year-on-year basis. Gravita doing well in trade today. Maybe it fell a little too much from the recent peak, and the performance of the lead business looked quite good. Back to you.
Thank you so much, Nigel, for joining in and giving us a sense of how exactly the results of Gravita India panned out. But one stock that's in focus from the broader end of the market is Apollo Microsystems. This is after the company acquired a 100% stake in Ideal Explosives. Ria from the research team joins in with more details.
Well, yes, Apollo Microsystems has been in focus today after they've announced that they're going to acquire a 100% stake in a company called Ideal Explosives for rupees 107 crores in an all-cash deal, which is expected to be completed within the next 2 to 3 months. Now, Ideal Explosives, which is a subsidiary of Hinduja Group's GOCL, is engaged in the manufacture and supply of packaged and bulk explosives, which is used in mining and infrastructure projects. And the revenue for FY24 for this company was around rupees 623 crores. Now, overall, this acquisition is expected to give a lot of benefits for Apollo Micro. It's going to lead to the consolidation of core high-value defense assets and know-how, and it will also unlock access to adjacent high-value domains such as precision-guided munitions, loitering systems, warheads, and autonomous weapon platforms as well. In fact, it is also expected to drive margin expansion for the company going ahead, and it will enhance their ability to pursue large-scale, high-value projects. Furthermore, it is also expected to increase the TAM of the company and extend reach into international markets across East and West Africa, the Middle East and Southeast Asia as well. Even if you look at the overall market size for explosives, that is expected to increase to around $9.37 billion in 2029 at a CAGR of 8.8%. So overall, this is expected to be very beneficial for Apollo Micro. In fact, even before this acquisition, the company had given a guidance for FY26 for revenue growth of around 45 to 50%. So a lot of positive triggers for the stock, and the stock was up around 7% early in today's trading session.
Well, thank you so much for that, Riya. Before we slip into a break, let's look at Motilal Oswal. The stock is up almost 9.5% today, 9%. Keep in mind that the stock had taken a very sharp knock in the last few trading sessions, especially after the company reported its numbers. But today, that stock is seeing a very sharp recovery. So on that note, let's now slip into a break. We'll get you more on the markets and stock-specific action on the other side. So don't go anywhere. Stay tuned. Welcome back. You're watching Midcap Radar on CNBC-TV18. As we've been highlighting, the broader end of the market is holding very strongly in the green. And one counter also in focus is Kalyani Steels. The company just reported its numbers a very short while ago. That stock has surged by almost 9% as of now. Look at the spike coming in on the counter. The margins have improved to 20.99%. They've also declared a dividend of 10 rupees per share. So definitely boding well for Kalyani Steels. But moving on then, IGL shares are also in focus after the company has hiked prices in Delhi. Sudarshan is here with more of those details. Sudarshan?
So it's the second price hike that IGL has taken in last 1 month. In April, we saw that IGL had announced a price increase of ₹1 per kg for CNG segment. And also again on 3rd of May this month, it has announced that it has increased basically price by ₹1 per kg, not only in Delhi, but also in the other areas that are surrounding Delhi. And this price increase is important for IGL because Delhi forms more than 68% of its total volumes, and it's going to help in margin. If you remember, in the con call of Q4 FY25 earnings, company had mentioned that if it's required, it would not hesitate in taking price hike to maintain margin, because there was an expectation that company might reduce its margin expectation from earlier target of rupees 6 to 7 in the near term, and in the long term rupees 7 to 8. So if for FY26, if you consider for the first 2 quarters, its target is to maintain the margin, that is EBITDA per SCM, in the range of 6 to 7, and for Q2, Q3 and Q4, it's expecting that to move higher and to be in the range of rupees 7 to 8. And that is one of the main reasons that company has decided to take the price hike. And the most important part is it has decided to increase the price even for the Delhi, which forms nearly 70% of its total volumes. And because of the price hike taken by IGL, even you are seeing an up move in other city gas companies like Adani Total and MGL as well.
Thank you so much, Sudarshan. So after the hit that the companies took on account of the APM gas allocation decrease, a lot of companies have resorted to price hikes in order to go ahead and protect the margin, as Sudarshan just explained. Well, Winnie now joins in, and she's going to tell us about how Netweb fared in Q4 FY25. Winnie, take it away.
So afternoon, in terms of Netweb's Q4 FY25 numbers, a good set of numbers came in from the company in terms of revenue growth, sequentially 24% growth, year-on-year basis around a 58.7% growth. Margins also are seeing a decent bit of an improvement there. But overall, the full year guidance of the company, that has been met. So yes, not to worry on that front in terms of revenue as well as profit guidance. Order book side bit of a decline on a sequential basis, mainly because due to the higher conversion is what analysts are highlighting. Now, AI as a segment for them has done very well. It's a growth driver during FY25, and in terms of contribution that has come in for AI segment, that is around 15%. In FY24, it was 11%. So seeing a growth on that front as well. Analysts also highlight that there's a strong beat coming in terms of overall sales of the company. Margins were slight bit of a miss versus analyst expectations, but order pipeline is very healthy. And even though we have seen a good Q4, order pipeline continues to be healthy. So that will be interesting to watch out for from Netweb. As of now, seeing a sharp spike up in today's trading session.
Well, thank you so much for that, Winnie. Indeed, a very sharp spike in Netweb on the back of a strong set of numbers in the fourth quarter. Now, as we wrap this edition of Midcap Radar, here is some market opinion. We spoke to Harish Krishnan, CIO and Head Equity at Aditya Birla Sun Life Mutual Fund earlier today. Listen in to on his call.
150 odd companies that have reported earnings, among the top 500. We've seen about a 5 to 6% growth at their top lines, and a similar kind of a quantum increase when it comes to their bottom line profits. We're not really so worried from a market level point of view of this slack in earnings that we currently are witnessing. Possibly in under 6-9 months, I would think the Diwali quarter, etc., we'll be singing a very different tune. Reasonable amount of flush of that excessive valuations and fraud that was there, over the course of the last year or so, that's kind of got cleaned out. Another data point that may be of interest to the foreign allocators, because we've seen significant amount of foreign selling in those 6 months. If you were to look at India's share of the world GDP, that's currently tracking at about 3.75%. And in our assessment, over the course of the next decade or so, this 3.75% of the world GDP is anywhere likely to track between 6 to 8%. That's pure math. The fact that, on a nominal base, we're growing at a faster rate compared to the world economic activity. Even when we look at the global perspective, we do think that India is more favorably placed, even amidst the global wars. Of course, if there is going to be a complete uncertainty, a phase of uncertainty that's going to cripple decision making, then of course, we will see some kind of a pressure.